do what we can't do ourselves. I'd rather bet on Bill Gates than anybody else, but I don't want to bet on anybody else. I mean, in the end, we want to understand ourselves.
The womb from which you emerge determines your fate to an enormous degree for most of the 7 billion people. Though from time to time, people have thought it's going to accelerate a lot faster or that it decelerated, and they talked about a double dip, if you remember that, a few years ago. I would like to just tell you a couple of short stories, and we'll draw maybe a couple of lessons from them.
And 14 of the 44 have been during this period when that $10,000 became 51 million. 7 have been Republicans.
Where change is going to lead. We think we have some ability to find businesses where we don't think change is going to be very important.
We all know the remarkable path to success that Warren Buffett has paved through his astute investment decisions. Are you ready to unlock the secrets to achieving a fraction of his unparalleled triumph? The undeniable truth is that while reaching the same level of financial triumph as Buffett may elude most of us,
well, we've been
and the world.
Yeah, well, we've been coming back in the United States since the fall of 2009, and interestingly enough,
there is indeed a golden opportunity to generate a modest yet satisfying profit. Unlock the secrets to successful investing by acquainting yourself with these invaluable tips, ensuring they remain at the forefront of your mind as you embark upon your inaugural investment journey. But hold on. Before we embark on this thrilling journey, remember to subscribe and stay in the loop and be the first to know. Currently, Warren Buffett is recognized as a businessman, an investor who has achieved enormous levels of success. On the other hand, Warren Buffett, like every other successful person, had to start from scratch in order to achieve their success. Taking a look at the path that a successful person took to get where they are today can offer both motivation and insight into how they got there. Warren Buffett's narrative of success reveals that he began his career in business and investing at a young age. He was able to amass a significant amount of wealth at an early stage in his life by making astute investments, maintaining a mindset that he went out of his way to achieve his goals, and being relentless in his pursuit of those goals. And throughout it all, he has maintained his lack of arrogance by giving away a significant portion of his money and accepting a salary that is quite low. It is possible that the knowledge that the United States has recently emerged from the massive recession that occurred in 2008 would cause you to be reluctant to invest in the market that is relatively weak. Stockholders were in a state of panic during the early stages of the housing crisis, and they were making a hasty effort to sell all of their stocks as quickly as possible in order to prevent the value from falling any further. This effect, when viewed from a macroeconomic Keynesian viewpoint, is, without a doubt, absolutely detrimental, as it only serves to further weaken the economy and accelerate the decline. Nevertheless, rather than giving up hope and selling stocks along with the rest of the general public, Buffett and his vice chairman, Charlie Munger, took advantage of the current depressed stock prices to purchase bargain purchases that will undoubtedly be profitable once the economy begins to recover. The economy is on its way to its upswing once more, and the cycles of boom and bust that it goes through are entirely normal. This is despite the fact that there will inevitably be pessimists who will appear. It is observed that the economy is showing signs of improvement on a daily basis, and the longer the boom lasts, the more severe the crash will be. If you're interested in investing in stocks,
I would like to talk to you about the economic future of the country, because I remain convinced, as I have,
you should wait until the end of the bargain period, when prices are lower, before the value of the stock begins to increase once more in tandem with the economy. Buffett asserts that there is a widespread misconception that investing in stocks is a risky business. While this is true, if you consider the long term, it is not actually a risky business. The formation of a diversified portfolio is essential in order to mitigate the impact of value decreases in stocks, which are unavoidable and will occur at some point in the future. As long as the overall trend of the stock is a growth in value, a short-term volatility in pricing is not that much of a problem if you think about it, especially if you are thinking about the long term. On the other hand, Buffett does provide a list of the errors that might drastically alter the prospective value of a long-term investment. In the event that the owner of the stock maintains a portfolio that is not diverse, there is a greater possibility that an important stock within the portfolio will fail, Spending extravagant amounts of money to engage financial managers and consultants may not always result in a positive outcome in the long run. As was said before in the chapter on Warren Buffett stocks, the risk of borrowing large amounts of leverage on credit in order to invest in stocks that fail and require repayment is something that should be taken into consideration. Regardless of whether or not you have the financial means to do so, it is possible that employing the services of a self-proclaimed professional who is also an expert in the art of playing the stock market might be a very appealing choice. Buffett makes the point that the market is quite unexpected, despite the fact that they may exhibit their successful track record, highly qualified education from an Ivy League college, and dazzle you with their degree of sophistication. Buffett's thesis is that the market is quite unpredictable. No matter how much or how hard someone may pretend that they have the formula or trends of the market figured out, Buffett argues that in reality, even he is unable to forecast the future regarding what will happen with stock prices. As a consequence of this, you should avoid squandering your money by employing a large number of expensive financial advisors for your stocks. There is a possibility that they have a well-informed prognosis. But a clear counterexample would be the crash of the housing bubble, which I have mentioned multiple times throughout this video. Despite the fact that a number of notable business magnates have forecast the impending fall of the bubble, a large number of other prominent individuals, including Alan Greenspan, who was serving as chairman of the Federal Reserve at the time, were certain in their assertion that the economy was not on the verge of a decline. It is important to remember that anything can happen anytime in the markets, as stated by Buffett. Therefore, it is important to avoid becoming complacent and assuming that a trend will continue. Prepare yourself for the uncertainty of the situation and develop backup plans. First and foremost, the stock market is a highly volatile and ever-changing environment. In the event that you're aware of the appropriate course of action, you should not attempt to prolong the process owing to sentimentality or other similar reasons. The majority of the time, reasoning will win out over intuition when it comes to the stock market, despite the fact that there are allegations of it being a mythological instinct. Among the anecdotes that Buffett frequently uses, one of the examples that he uses is Tesco, which is a British network of supermarkets that started to fail. In spite of the fact that he had sold millions of shares prior to the crisis, he was hesitant to totally sell all of the stocks and continue to do so at a gradual rate. His partner, vice chairman, referred to this behavior as thumb-sucking. As a consequence of this, the stock values of the company ultimately dropped by more than $400 million. Despite the fact that it is impossible to accurately forecast the stock market, this does not mean that you should continue to hold on to items until their expiration date in the hope that something unforeseen would miraculously save the stock. In every situation, you should always be ready for the worst possible outcomes, and you should always act with confidence on what your intellect is telling you. While it may seem like the average person is at a bit of a disadvantage when it comes to investing, fear not. There are options out there that can level the playing field. Apart from the tips we mentioned earlier, take mutual funds, for example, like index funds. They're user-friendly and relatively safe compared to going all in on risky securities. Just remember, reaching the level of success that legends like Warren Buffett have achieved is no easy feat, even for the wealthiest individuals out there. It's all about holding on to those precious stocks in your portfolio and maintaining a stable financial journey without encountering any major losses. Once you've got those finance terms down pat, get ready for a lifelong journey of learning. While the short-term market may be as unpredictable as a roller coaster ride, the larger cycles can still be anticipated in broad strokes. Keep striving, keep hustling, and who knows, maybe one day you'll be the next big success story. Until then, stay tuned for more inspiring content. And don't forget to like, comment, and subscribe. We'll catch you at the next video.